Hey, Fiona.
Hi. So what is credit scoring?
Credit score. Okay, good question. So there are, I would say, probably 70% banks who do credit scoring, or probably 80, I would say 80% of all the lenders. Credit scoring is that when we lodge the application to a bank, to a lender's platform, through our aggregator, of course. So the lender's system, it checks your credit scoring on the basis of your assets and liabilities and your credit checks for the past 7 years. Let's say if you've got a lot of credit, when you say, let's say you're applying for a loan and you've got a lot of credit checks on you, then when the bank does a credit check, credit score on you, it could decline it. It could decline it straight away. So which means that let's say you've got, for the past 7 years, you've got 100 credit checks, right?
Okay.
But your borrowing capacity is absolutely fine.
Okay.
You know, your borrowing capacity, your loan to value ratio, everything is perfect. But you've got a lot of credit checks on you because you've applied for credit cards, you've applied for certain loans and things like that, right? So when this thing happens, the system will automatically decline the loan. It doesn't even go to an assessor.
Okay.
That's the problem. But there are actually two banks who don't do, 2 or 3 banks who don't do credit scoring under our panel. So let's say if somebody's got too many credit checks, they can still come to us and we can take them to a different bank altogether. But that's how, banks do credit scoring. It's just automatically declined. Sometimes they can manually override it depending upon how strong the deal is. 100 is just an exaggeration. It's not necessary that you have too many, but there could be a benchmark figure set in a system, a lender's system, for example. So if that's the case, then in those circumstances, the system will automatically decline it. But I remember I had a case long time back, 3-4, when credit scoring just started to happen, So at that time, I had to send the automatic decline deal to my BDM, and he then spoke with the assessor, and the assessor manually assessed it. It was a very strong deal. Manually assessed it, and it got approved.
Okay. So is Equifax same as credit scoring?
No.
It's
No,
not.
Equifax is different. Equifax it's a credit check on your credit score.
Okay.
So
Got it.
yeah, so what Equifax is a company which helps us to get
we'll check how many credit cards you have and all that
meaning
stuff.
how many inquiries you had,
Inquiries, okay.
It's your credit report.
Oh,
It
okay.
gets your credit
Got
report
it.
basically, Equifax. So it's not same as
Right.
credit scoring.
Okay.
But when you actually check the Equifax and before you even lodge it to the bank, you can see how many scores, what kind of a score you had on your VIDA file. Meaning on your credit file, how many.
That 861 or whatever
Exactly.
it comes is the credit
Is
score
the credit,
actually.
exactly.
Yeah,
If
okay.
let's say you can see that a customer
So
has
when it
so
goes
many,
into green, that means you are safe, and as you go
Exactly.
into red or yellow, it is.
it's not
Okay,
safe.
got it.
Exactly.
Okay,
So that's why we do the credit checks
beforehand.
so that when it go, like, we know that which bank will accept it. If there are already too many inquiries, we don't even send it to the banks who do credit scoring.
Okay, great.
Yeah.
Yeah.
Any questions?
No, that's
All
it.
good?
Yep.
Perfect.
Thank you.
Thank you.